Welcome to Get Serious. So today I wanted to rehash some minor subdivision guidelines, key lessons. I know throughout the course of this podcast, I've probably touched on this topic many times before, or at least a few times before, but it bears worth mentioning just because I see some of these things so routinely, and both serves as a reminder for myself as well as the audience and land investor community overall on what to look out for. So I was doing the live land daily diligence review earlier today, and there was a minor subdivision, roughly 70-acre parcel. It was a bit east of Waco, Texas, and it had nice road frontage. The game plan was just to, use the 10-acre state exception criteria within Texas to chop up into 7 child parcels and then move them on the market. Pretty cheap survey expense, no rigmarole to get through from a regulation perspective. And the on-paper exit was going to be like roughly 2x the purchase price, which is always what we like to see. However, when you're looking at the actual market, land investor who sent us over the deal was thinking they could probably exit these properties for roughly $5,000 per acre. I came in at, let me see what that ending. Yeah, so my final expectation was closer to $7,500 per acre. So why would I get to such a significantly discounted price there? Few things. So within the parent parcel itself, roughly 20 acres or so was within a 100-year floodplain with much denser vegetation and large vegetation too, trees and stuff that's just going to be more difficult to remove. There were a couple creeks going through as well, and there was a power line going through that area. So, pretty significant inferior characteristics compared to the remainder of the property. And the remainder was, nicer cleared land outside of flood zone. A couple areas actually had a small pond, unclear if it was stocked or not. One lucky child parcel would have had a existing storage building that was a leftover from a previously existing mobile home that was on the property that no longer seemed to be available there. Plus, there was an existing water tap probably in the area that had the mobile home, but no other utilities were in place. I guess water seemingly was available, though again, if you're doing a minor subdivide, you always want to check in on available water for the area to actually support several additional possible homesteads to come onto the market. So, it's pretty raw land from that perspective. And, the game plan was just to do those 10-acre chops, but, 2 of those were going to be severely compromised given they were sitting within the 100-year floodplain with some of the wetlands going through, plus the power line going through it. And, at least one of those child parcels, there was only going to be maybe a sliver that would support a septic system, a conventional septic system based on the soil map. So it was going to be pretty risky to do a child parcel play in that part of the property. So my suggestion was probably like, okay, be a bit more conservative here. We know that's a weaker part of the property. Just do, a 30-acre, maybe even a 25-acre chop. And so, you account for some of that flood zone acreage, but you give a potential buyer a little bit more of the cleared area that is outside of the floodplain, less dense vegetation, a bit further away from the power line. So then, you're getting this potential buyer a little extra land, plus it could be pretty interesting from a rec perspective and also buildable, but then they don't have to deal with as many of the negative characteristics as that floodplain and wetlands would imply. That was my initial suggestion there. And then looking at the various comps in the region, again, you never want to be the most inferior property on the market because you're never quite certain how you could necessarily price yourself, even at a discount, to still move something that is just not getting, true completed sales on the market. So a lot of what I was seeing from the sold comps, of which there was decent activity, not crazy. Again, as I talked about last week, there's more of a correction within the housing market, especially outside of bigger cities. And in some of these COVID boom markets, you're just going to get less activity out there, a lot of negative pressure on the pricing. So I'm cautious about that. And a lot of those parcels that were still moving, they had at least partially fenced or fully fenced properties. They already had power and existing water taps on the property itself. So, naturally that was going to serve as an advantage. Some of them even had small driveways, culvert, and memories not perfect from all the comps I reviewed there, but in general, they had more superior characteristics. Not in floodplain, cleared already. So that was something to keep in mind. And those were moving maybe close, again, because it's non-disclosure state. If we're ever going to be pursuing properties deeply in non-disclosure states, we're just going to reach out to a realtor and see, okay, what was the true sold price here? But we roughly estimated some of those better comps were probably moving for between, like 12 to maybe 15K per acre. So then you think, okay, yeah, maybe, a little bit inferior. I can be on the lower end there. 12K per acre, make this thing a possible 2X with adding, 7 child parcels on, even some that are inferior. But when you look at the active market, there were a ton of minor subdivides, some like very large ones, saying like 20 plus child parcel subdivisions that they had a decent amount of sales, but a lot had been active, some more recent, some that had been on for a while, and variations of characteristics kind of across the board here. So like if I'm seeing something like that, and some of these were a bit closer to Waco and just I-35, so they're a little less rural than what the subject was showing anyway, plus a lot of them were outside of floodplain. Then I'm going to be thinking, I need to be able to undercut all of these if I really want to move this parcel. And some of these properties, were only being listed at like 8,500 an acre, maybe 9,000 an acre. And they weren't really inferior parcels either. Maybe they were roughly the same as the subject, again, blended, because we have to account for the subject having some flood zones, some wetlands, the power line going through, but some parts were a little bit better. So, you have to kind of blend all of the characteristics together to find your right price. But that's how I roughly ended up at like, okay, I need to be able to undercut all of these if I really want to move, possibly 7 child parcels. I'd probably try to do 5, 4 smaller ones and the larger one, and try to move it at, potentially 7,500 PPA, which, was almost half of what the land investor was thinking could potentially be an exit there. Not saying they couldn't achieve that. It's just I wouldn't bet on it. I wouldn't fund it, especially in this market and all the harsher lessons that we've learned recently, of which I've spoke about many. So hopefully this helps again to, when you're considering minor subdivide markets, or like I see some of these fancy pants presentations sent our way and, nice photos, underlying markets and the utilities. But they're so often like the focus on the comps, maybe you're sending me like a 15-page report and like one page is looking at comps. And I see this even in some institutional investing deals, like even where my partner's at a hedge fund, they had a 40-page report on a $40 million deal. Like 2 pages of those are associated with comps, and I like flat out disagreed on their approach to it, even in the midst of the more sophisticated financial underwriting. But like you can see, if you signed up for our Facebook group and you get access to our due diligence questionnaire, like the comps are really front and center on that. That's our gold standard, how we determine pricing here. Within Land Pricer, by far the largest weights toward pricing are associated. Okay, what is this underlying market? What are these comps that we can look at? Like if you're not really looking at that full picture, like you can just get fooled so quickly and go out of business. So like I was just poking so many holes through this particular project because, there's just a ton of active properties. Like you gotta keep that in mind before presenting anything or thinking, there might be, more of a layup in terms of a possible exit there. a routine topic here, something that will probably come up again because it's tough to do subdivides well. Know that from experience. And I know there's a lot of folks trying to do those, but they're easy to get tripped up on, and clearly there's just a lot to pay attention to. So it bears worth mentioning and going over these topics again as we all continue to learn together. So with that in mind, seriousland.capital for any of your funding needs. I mentioned the Land Daily Diligence Facebook group, zero cost review of your land deals, Mondays and Thursdays, 2 p.m. Central. And Land Pricer, I mentioned that a couple times as well today, the most reliable land pricing tool on the market. With that, subscribe and share, and talk to you all tomorrow. Bye.